Aditya Agarwala is joining us now to talk more about how to position your trades. If I'm already carrying on my longs, because last 2 days there was enough opportunity to build long positions on the lower levels. Where should I put my stop losses? And if I want to get into the market, where are the opportunities?
Good afternoon, Ajay. Good afternoon, Anisha. Thanks for the show. Ajay, I believe there is momentum on the upside, no doubt about that. And there is a risk on trade, which market participants are clearly latching on to. I believe immediate resistance on the upside on the Nifty is somewhere around 21,200. That happens to be the 161.8% extension level of the recent down move that we had seen in past few trading sessions. But once 21,200 is taken out, I am looking at a target 21,500. So that is the immediate target that I'm playing with, Ajay. If one is looking to go long at current levels, maybe the risk on the downside will be slightly higher. Immediate supports on the downside are somewhere between 20,900 or 20,850. An intraday dip, if it comes around, that will be a good opportunity to initiate fresh long positions in the Nifty and Bank Nifty both. I'm slightly more bullish on the Bank Nifty, Ajay, because of the fact that it has underperformed for past couple of trading sessions, and now it seems like it's getting ready for an outperformance. And private sector banks are something that I'm betting big on. Talking of the Bank Nifty, I'm looking at a target of 48,200 to about 48,300 on the upside. Even at current levels, if one wants to initiate fresh long positions in Bank Nifty, they can do so, despite the fact that it has witnessed a good gap up opening in today's session. On the downside, 47,300 or 47,500 is a very good support zone for the Bank Nifty. And the fact that you pointed out about the mid cap and the small cap end of the market, which continues to inch higher, despite the fact that it is trading at overbought levels, no doubt about that. So one needs to be a little cautious as far as the mid cap and the small cap indices and stocks go. Because there could be a bit of profit booking that can kick in here, even though the price is yet to correct. The RSI and the other indicators are sitting at overbought levels, but the price is yet to correct. So clearly, I would want to stick to large caps at this moment, and private sector large cap banks too. I can look at and IT definitely.
Talk about some potential trades in interest rate beneficiaries or rates edging lower beneficiaries. Though I am very surprised the way entire IT sector is getting re-rated, because the large ones are barely growing, but mid caps are making up for the growth which the larger ones are missing out. But where would you place your bets on within IT? Any specific names, large cap, mid cap?
Yes, Ajay, I would stick to now, as you mentioned, that it's the mid cap end of the IT which has actually been outperforming the large cap IT space. I believe one should look at large cap IT names now, because it's a matter of time before they can start to outperform. If I have to pick a couple of large cap IT names, it will be the TCS and the Infosys from the large cap space, because I still believe there is decent room on the upside in both the stocks. You can easily make at least 5 to 10% if you hold on to them for at least a month or a quarter. Both of them should start to outperform from here on. TCS has done decently well for itself. I believe now Infosys should also chip in and start to outperform. If I have to pick a mid-cap IT name, then Coforge will definitely top the list, despite the fact that the stock is up 6% in trade today. But Ajay, it's on the verge of breaking out into an all-time high territory. So once the stock breaks out into an all-time high territory, from technical parlance, it continues to go up higher from that level as well. So Coforge from the mid-cap IT name will top the list, and Infosys and TCS are the two stocks from the large cap IT name that are better.
Aditya, but tell me, what are the stocks that are coming on your radar, your top recommendations?
So Anisha, I've got a couple of buy recommendations, and both from the financial space, because the way the financials, the NBFC space is moving, I believe there is decent money making opportunity there. The first is Mahindra Finance. Stock has broken out from a good consolidation phase, and it's backed by extremely healthy volumes. So at current levels, one should look to go long on Mahindra Finance. Look for a target of 315 on the upside, with a stop loss at 264 on the downside. The second stock is Pyramil, PEL. Again, as we speak, the stock is making new highs, the highs. So, but again, at current levels, one can look to go long for a target of 985, and if 985 is taken out, I think stock can test levels of 995 as well, with the stop loss 920. Offers good risk to reward ratio in PEL as well. So both the stocks are by Mahindra Finance and PEL, and I believe you can make decent money both these days.
Okay, looking at making decent money on some of those top bets. Thanks so much, Aditya, for making time and speaking with us. Appreciate you joining us.